Hi traders, if identifying the right fair value gap or high probability fair value gap has been an issue for you, you don't need to worry, because in this video I will show you how to identify high probability fair value gap and take the best trades. Alright, let's dive in. So to identify high probability fair value gap, you need to see a market structure shift or a break of structure. Then you need to see, number two, you need to see a PDRA retracement. So you want, after the price has created a shift of market structure, you want price to come down to at least the 50% PDRA, right? Right now, let's go into the charts to see what I'm talking about. Okay, so we can spot this fair value gap here. We can spot the fair value gap from this point here and to this point. And also we can see a market structure shift. So I want to see a market structure shift first. Right. Okay. There's a market structure shift here. And then now you may want to take this trade from here. But you can see if you take this trade from here, price will just come and induce you. Why? Because this place hasn't gotten to the 50% yet. So we want to take Fibonacci to then put here. You can see that price didn't get to this 50%, and now price was going, and now price got to the 50%. The moment it got to the 50%, now we can start buying from here, right? Now let's go to another chart. Let me explain. So on this one here, we can see, let's mark this fair value gap first. We can see this fair value gap here. Right, the fair value gap is valid when it created a shift of market structure. So we saw the fair value gap and it created a shift of market structure, and now we're waiting for it to retrace to at least the 50%, right? So this one even went to touch almost at this 8.60. So we can take our trade from here. We can take our trade from here. So like so. First of all, you see a shift of market structure. Then you want price to come to at least the premium, the PDRA. You want price to come to the PDRA before we take the trade. So here you can spot the fair value gap here. Yeah. So then this fair value gap is valid when it creates a market structure shift. When it creates a market structure shift, and then we take our fib and we just put like this. We wait for price to come down to at least to pass the 50%. So one price is at our premium. So when you're selling, you're waiting for price to come to your premium, and when you're buying, you're waiting for price to come to your discount. So this is price has come to our premium, so we can sell from here. We can just take this trade from here. We can sell from here. So first of all, maybe we put our stop loss here. We want to just target this low here. That's a nice, at least 1:2. That's a nice trade. So this is basically how to identify your fair value gap. First of all, you can see this one too. You want to see a market structure shift, right? Then this is a fair value gap. So this point, and we want to make sure at least price traded into 50%. So price traded into it, so we can take this trade from here. We can sell this trade. You see, so nice and easy. This is just how you get a valid fair value gap, right? You see another one here. This one, market structure shift, right? Then you can see the fair value gap here. So just wait for it. There's the fair value gap. The reason why you have to wait for, you have to make sure it's at your PDRA is because sometimes it may be a false fair value gap, may not be valid. So the valid one you have to see a market structure shift, and then price retracing to your PDRA. So price came to this discount zone. It's below the 50%, so we can buy from here. We can buy from here. You see, so it's nice and easy. You just need to confirm your entry. You need to confirm this trade. You can see how this trade played out nicely. Alright guys, so if you found this video helpful, kindly like and subscribe for more amazing content like this. Thanks.